I'm Tyler London. I'm the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. It is Friday, August 22nd, and we are just a couple of minutes before the market opens. It's about 9:30 a.m. Eastern Time. As you can see here, we have the chart of the S&P 500 up. So not the best week for the broad market. It was down, 5 out of the last 5 days. If we switch over to the NASDAQ, down 5 out of the last 6 sessions. A little bit better on the small cap indices. Still, kind of erring on the weak side, but the S&P 600 here trading right around that 1390 level, roughly the overhead resistance area from July that the index punched through early last week when it looked like the chances of a September rate cut really took off. Now, historically, small caps and especially small cap value stocks will tend to do well during the beginning of a rate cut period, which, the debate obviously still open whether we're there or not, but that's why we saw small caps take off last week. Now, drivers of weakness over the last 4 or 5 sessions has been chatter about stretched valuations. Several Fed members flagged this as a concern in the July FOMC meeting minutes that were released this week. And there's also been talk about an AI bubble. Comments from OpenAI CEO Altman really fanned that AI bubble flame, as did an MIT study that found that despite the 30 to 40 billion in enterprise spending on Gen AI, around 95% of organizations are still seeing no business return. Now, I think personally this AI bubble question, it's going to be around for a while. Of course, we don't know what's a bubble until we have the benefit of hindsight. Clearly, right now, the mega caps and a lot of other companies are in investment mode, given that it takes some time to build a data center and the energy infrastructure. The real harvest phase of these investments is still likely sometime off in the future. So I think it's a good idea to question whether or not we're in a bubble, but also not to discount the potential, as it seems like we're still pretty early and pretty steep in the innovation curve. Now, if we go back to the market and some individual names this week, adding to the bearish tone around AI was news that Meta will restructure its AI division and freeze AI hiring. Of course, again, context here is important. This comes after an insane pace of hiring with mega salaries at Meta. So it does make sense that that sort of fueled the AI bubble flames. On the other hand, if we go back to recent commentary from Microsoft, they have pointed to capacity constraints, and they've said that at this stage of the AI product development cycle, the profit margins are stronger than at a comparable stage in the cloud software cycle. This is partly because AI infrastructure is scaling pretty quickly and efficiently, and the operational overhead is lower due to AI-driven automation. So some interesting commentary there. Bottom line here, expect this debate to continue. I'm sure we're going to see areas of excess, but also a lot of companies continuing to invest and rolling out really useful and powerful AI products. Now, on the macro, moving on, there's been a lot of talk about a potential ceasefire between Russia and Ukraine. Yesterday, we got some details on the U.S. and EU framework agreement on trade, but really the big event of the week, it's happening right now in Jackson Hole. Of course, I'm talking about the Jackson Hole Symposium, which started yesterday. And Fed Chair Jerome Powell speech today at 10 a.m. Eastern Time. So that's coming up in about half an hour from when I'm recording this. Now, if Powell strikes a dovish tone, I would expect the market and especially small caps to do well, at least for a few days. If he strikes a hawkish tone, the market's probably going to be somewhat challenged in the short term. I think the near-term outlook, it gets a little bit murkier if Powell doesn't do either of those, and he does what we're thinking is more likely. He's going to strike a non-committal tone. I think he's going to say the Fed remains data dependent and that upside risks to inflation still exist thanks to tariffs. Now, that's because inflation, of course, is still sitting around that 3% level above the Fed's 2% target. On the other side of the Fed's law-required mandate, of course, we have managing the labor market. It has shown signs of weakness lately, even though it's technically at full employment. Yesterday's weekly data on initial unemployment claims were a little higher than expected. Now, over the last week, the market has begun to price in a more patient Fed. The probability of a September rate cut has been sinking. It's come down from well over 90% last week to just over 70% yesterday. Still a relatively high chance, but there's a lot more data that's going to come out before the September 17 meeting. Personally, I would love to see the Fed cut. I think a lot of us would. So it'll be a very, very pleasant surprise today if Powell sounds open to a September cut. But I don't think it's a good idea to bet on it. I think we're going to remain in wait and see mode, especially since a few Fed members spoke out yesterday, basically saying that with inflation progress stalling and the economy in a decent place, the Fed is in a pretty good position right now. Now, let's move on to, well, we have the 10-year yield here. As you can see, it's climbed a little bit. Let's move on to some stocks. So I want to flag a few areas of strength, just throw out some names quickly, and then we'll go a little bit deeper into 3 stocks. So in the screens this week, I noticed a lot of construction and engineering type stocks are continuing to look very good. On the smaller end of the market cap curve, we have Construction Partners. ROAD is the ticker symbol here, about a 6.5 billion market cap. Also Tudor Perini, 3 billion market cap, obviously a nice looking chart with a nice jump after earnings came out. We have Everest Construction, ticker symbol ECG, with a 3.8 billion market cap. And Granite Construction, ticker symbol GVA, with a 4.8 billion market cap. Also on the screens, a lot of gold stocks looking good. The price of gold has been consolidating since the Trump administration has been trying to tamp down all the tariff drama. But central banks are still buying, and I think we're going to see the price of gold head higher this fall and into the end of the year. And I think that's what is driving some of the continued performance in the mining stocks. Of course, here we have Newmont, ticker symbol is NEM. Other large caps, Kinross, KGC, Agnico Eagle, AEM. Those look good, as do a number of smaller names. Here we have OR Royalties, 5.7 billion market cap. And SSR Mining, SSRM is the ticker symbol, 3.4 billion market cap. And Perpetua Resources, ticker symbol PPTA, with a 1.77 billion market cap. All right, last up for the broad stuff, defense stocks. The driver's pretty clear. We all know what those are. Specific name here is KRMN Holdings, a relatively recent addition to the public market. Market cap is just shy of 7 billion, ticker symbol KRMN. Kratos Defense and market cap 10.85 billion. And Mercury Systems, MRCY, market cap just under 4 billion with an impressive 27% rally the day after earnings came out. Okay, let's go just a little bit deeper. So back to the construction type names. Primoris here, PRIM, is a market cap of 6 billion. I just added this one to my watch list for Cabot Early Opportunities. It is an engineering, procurement, and construction services company. So they install natural gas and electricity, utility distribution and transmission systems, and they also do a lot in the renewable energy, energy storage, and renewables fuels areas. Few moving parts within its segments. They have a utility segment that's growing faster, but the larger energy segment is expected to accelerate growth in the back half of the year. The recent quarterly report, as you can see, the market liked it quite a bit. Much stronger than expected. Revenues grew by 21% to 1.89 billion. That was a 12% beat, while adjusted EPS of 168 grew by 62% and beat by 61 cents, which is a huge margin. So analyst estimates have gone up along with the stock. Now, kind of a wild card name here is ThreadUp. It doesn't fit into any of the broad categories we just talked about. It is a large online thrift store. It's the biggest one out there. Ticker symbol TDUP, market cap of 1.3 billion. Now, tariffs and the closing of the de minimis loophole has really helped this business. A lot of bullish commentary from management on the last couple of earnings calls. The company's marketplace, it lets sellers clean out their closets and make a little money. Buyers can grab secondhand fashion at pretty deeply discounted prices. There was a lot of momentum in the most recent quarter. The company acquired more customers than at any time in company history. A lot of marketing investments, those seem to be paying off. Like I said, that closing of the de minimis loophole is a pretty big tailwind. Management raised full year revenue guidance to a range of 298 to 302 million. They're forecasting 25% growth in the third quarter, and it is worth noting that the fourth quarter is typically slower, so they're forecasting around 10% revenue growth. It'll be interesting to see what happens then. Like, is resale something that people pay a lot for or shop a lot for heading into the holidays? We could have a debate about that and whether, giving gifts of secondhand clothing, even if it's very nice, is something that people will do. Anyway, save that for a around the dinner table conversation. So last up here is Sport Trader, market cap SRAD. So I talked about this one in mid-July. It continues to look good. It's a Switzerland-based sports tech company. They have a platform that integrates sports media and betting, partnerships with all the big sports organizations, NHL, MLB, NBA, NASCAR, FIFA, you name it. In the fourth quarter, the company should close on the acquisition of IMG Arena and its global sports betting rights portfolio. I believe that would have added around 20% to top line growth this year had it closed, but obviously it hasn't yet. So a pretty meaningful acquisition that should propel growth in 2026. And as you can see, SRAD traded up after the Q2 earnings report, met expectations on the top line. So that's it for this week. Of course, everybody, the big news is going to be coming out of Jackson Hole soon, so we'll get to that. And I hope you have a nice, long weekend. Take care.